Good afternoon, everybody, and welcome to your daily market insight video for Thursday, November 11th. It is only about 5 minutes after market close here in Jacksonville, Florida, 4:04 p.m. Eastern Time to be exact. And in today's video, we're going to look at a handful of gap ups, particularly earnings gaps that were up big after hours pre-market this morning. But we want to look at how did they actually fare, how did they trade throughout the day, where they end up today, because there was some big time moves that failed, some that held up. We're going to look at those charts here in just a moment. We're also going to look at some of the biggest winners, some of the biggest losers, the best performing sectors and worst performing sectors of the day, as well as take a quick look at the dollar and where yields are at. So before we do that, let's talk about what just happened. Indices mostly flat and finishing near the lows of the day. The G5 was strong, as you can see. Performance-wise, G5 leading the way up 1.12. S&P, like we said, pretty much flat, up 0.06%. Q's up 0.28. Dow down about 0.5%. That's the big laggard for today. Midcaps up about 0.5%, and the Russell 2000 up about 0.4%. So the S&P and the Qs both were up more, as were all the indices here at one point earlier in the day, like we said, that didn't have the strongest finish to the day. Not the worst, but not the strongest. So Dow the laggard, G5 the strongest, kind of what you would expect on a day like that. The market state remains the same. There is no change. It is still in an uptrend. However, we do have one change to the trend gauge, and that is market leaders as of yesterday went from bullish to neutral. We saw a lot of market leaders, particularly in growth land, slice through moving averages, have 10, 15, 20% pullbacks in a matter of a day or two, which doesn't mean it's the end of the world, but it's something that you want to take note of and be cautious of, because when stocks start having 10, 15% moves to the downside after they've been stair-stepping their way up for the better part of the last few weeks, you can lose gains quickly. So that's something you want to be aware of. The market may shore up, things may stabilize, and a lot of those stocks that had rough pullbacks may be fine. But we saw some harsh action in some leaders. That's why we changed that. All other components of the trend gauge remain the same. Before we get into these charts, we look at some of these gap ups and whatnot. Let's talk about Revere very quickly. If you have any questions or comments regarding any of the stocks I cover, anything I say in the video, please send me an email. I'd be happy to discuss and answer any questions you may have. If you're interested in what we do as a company, what our investment strategy is, you can email me and ask about that. You can also email anybody here, Dan, Tim, Alex, Merrill, or Don at revereasset.com as well. So let's get right to the charts, folks. We're going to look at the S&P here first. So the S&P now has pulled back about 1.5% or so off the highs over the last 4 days, give or take. But the positive since my last video, and we're going to look at this as we go through all the indices, since Monday, right, 11/8, the positive here is as we've pulled back and consolidated a little bit, we've gotten less extended, which always happens, right? When you pull back after you've had a nice run, you get less extended, yes. So as we go through these indices, you're going to see that a lot of these are very close to the 8-day. We're around 1 to 1.5% from the 21 on the S&P and the Qs, which just a few days ago was closer to 3 or 4% extended. So we're starting to see a little bit more normalcy in regards to historical extension from moving averages. So on the S&P, for example, now we're about 3.5 from the 50, a little over 1 from the 21. That's not absurd by any means. I would keep a very close eye on yesterday's lows on the indices as well as individual stocks. Yesterday's lows, 462.04 on the SPY here. Important level to watch. If that breaks, it might be possible that we visit the 21, which is not very far below. The Qs a little bit more extended than the S&P. Let me pull this up. Here we go. So the Qs a little bit more extended. They've also had a little bit of a harsher pullback, closer to around 2 to 2.5% compared to the S&P's 1.5 in that same time frame. But now, same story. We're about 1.5% from the 21. Kind of rejected at the 8-day on the Qs here. So time will tell if that's actually important or not. Once again, yesterday's lows important on the Qs and important on the S&P. The 21 EMA is at about 385. So like we said, about 1 to 1.5% below where we are currently trading. But once again, not crazy extended. Remember, here we were 7% above the 50. We were 5% above the 21. Now we're starting to get back to some more normal areas, maybe allowing this market to catch up and continue to run if things can hold up. So the Dow was the laggard. I mentioned that. That one's actually getting really close to the 21. We talked about the fact that it's been the least extended out of the bunch pretty much the whole time. But DIA only 2.5% from the 50, less than 0.5% from the 21. That's something to keep your eye on. DIA 358, 357 is the key level to watch there, as well as these previous highs, right? That's going to be important on all of these major indices. For the Qs, that's 383. For the S&P, that's 454, I believe. IWM, it's 234, 235 area, as we're about to look at here. So IWM, one of the strongest of the major indices today, getting back above the 8. That's what we wanted to see out of IWM, but the most extended out of the group as well. Still not as bad as it was here. We come back, we're about 2.5 from the 21, 5.5 from the 50. But we discussed that small caps can stay more extended typically than large caps like the Qs and the S&P can. MDY, very similar to IWM, about the same extension-wise, back above the 8s. So MDY, IWM continue to look good. The Qs below the 8 by a little bit, S&P right on it, Dow slightly below it. So coming back to earth a little bit on the indices, we'll see over the next week or so kind of where we go from here, how we digest this move and whatnot. So before we get to individual stocks, let's quickly take a look at TLT, which was down just slightly today. We'd like to see this start trending higher, but for the time being, finishing at the lows of the day. Not the greatest for stocks in general, especially growth stocks. And then UUP, the dollar, which had a big move yesterday, following up with another decent move today, making a new high. So those aren't super positive things for high risk, high beta stocks, but it doesn't mean that they can't possibly coexist and do well together. Like we said, time will tell over the next week or two how things end up shaking out. So let's move to some of these gap ups. Let's take a look here. And I talked about a couple of these on the podcast. Be sure to check that out. But we've got SOFI here up about 13%, 150, 160% above average volume. Although this one did not finish at the top of the range, it still had a pretty good day, especially when you compare it to some of these other gap ups we're going to look at. So we're going to look at a 5-minute on a couple of these here. It actually, over the course of the day, really starting at about lunchtime or 1 o'clock Eastern, headed down and ended up undercutting the previous lows from the morning, finishing pretty much right at around 23, which is roughly where it was in after hours trading. This one got all the way up to 24.70 nearly today, finished at 23. SOFI, I would say one of the better gaps of the day, although it still is not picture perfect. You like to see finish at the top of the range, but I would watch the 8-day exponential moving average on this one. It hasn't come all the way back to that yet. That's about 4% below. So SOFI, a nice gap today. Another name that gap that we own and actually added a small amount to was Bros. This one went up to 72, 73 initially. Very volatile stock, but we ended up adding a little bit to this one today, just a small amount. It was a small position to begin with. Came all the way back to 62 today and ended up finishing up 6%. So very volatile stock, one that came back and filled the gap and ended up finishing up 6% today. Another one that we sold ahead of the gap in Grotection, a firm, very, very volatile the last few days, was at 176 after hours yesterday, up 30%, finished the day up only 13. Even at the start of the day was at 166, got all the way down to 147. So not the greatest action from a firm here. It may just be that it has some sorting out to do in regards to price discovery. Maybe it builds a little bit of a base here at this 150 area and allows these moving averages to start to catch up with it as well. But for the time being, at least the positive is we're back above 150. We're back above this 146.90 pivot. We're back above the 21. Now we want to see, can we get above the 8-day exponential here on a firm? Can we get above today's high? And then can we ultimately take out this 175-ish high here, 176 high from this day? So a firm up 13%, but not the greatest in regards to where it was prior after hours today and just in regards to the intraday trading. A couple more here. App, the A+ winner of the day, App Lovin', up 20%, very close to the top of the range, very nice volume. This is A plus, incredible move from APP here. MQ, a big time loser, was up 30% or 20%, excuse me, after hours yesterday. At one point, you can see the incredibly wide range today from 30, a little over 30 to 24. Ended up finishing really, really poorly. So MQ, not a winner from the day. So last one here, Celsius, one that was up 15, 20% pre-market, came all the way back down to being red or slightly flat, or yeah, red a little bit on the day, ended up being up 4%. So one similar to Bros that had a very wild ride today. So MQ, a big loser, maybe SOFI, APP, the big winners of the day. Let's go through some of the other strong names. NUE, steel stocks were strong today. Respecting the 8, you can see kind of the formations of a new uptrend here on NUE's. STLD looks very similar. MSOS, one of our positions in Grow, a clear change in character on this weed ETF, evidenced by the volume, the price getting back above that 30 area there. And then also, if you go look at the top holdings in this ETF, Green Thumb, I'll show you Green Thumb very quickly as we move through the video here. A changing character on a lot of these names as well. So something to take note of with MSOS, many of the weed names beginning to display some relative strength. Uranium, another holding of Grotection, up 3.5% today, one of the strongest areas of the market today. You also have Roblox, which has been a wild ride since its huge gap up about 3% today, showing some relative strength with some volume today. AMBA, one that had a brutal day yesterday, like many growth stocks did, responding well, up 5%, reclaiming the 8-day exponential on AMBA. TAN and Enphase solar stocks both acting really well. Solar ETF here up 6%. Enphase up about 7-8%. Big time strength out of solar continuing. Net, TAN is one of our holdings in Grotection, I should say. Net, another one of our holdings in Grotection, finished weak today, but was up 2-3%, while the market was really not up much at all. But really nothing wrong with this action. You just want to see it get back above 200 and stay there. But net green on the day nonetheless. A couple more here. XOP and XME, the two strongest sectors today, two of the strongest sectors. And then conversely, this is XME up 4.5. XOP was up about 1.6. Conversely, the weakest sectors of the day, XLP, consumer staples, XLU, utilities, XLV, healthcare. These are typically your safer, less risky areas. XLI, industrials, not necessarily in the same as those previous three, but also red on the day. So those are your weak sectors. Skin, a recent gap down, continuing that weakness today. A weak name across the board. This had been a leader. Right now, not looking so much like a leader anymore. Upstart, also weak today, down about 4.5%, 4% or so. A few more here. CBRE, and this is one that we hold. Not necessarily weak. Actually, when I looked at it about 30 minutes before market close, it was close to red. Now it finished green. I wouldn't say this is a weak one at all. This is just one of those slower grinder names. And then my last interesting comparison here is IVE, which is the S&P 500 value ETF, down about 0.14%, and IVW up a little bit today. So that shows you some of the strength that was in growth as opposed to value, with the exception of some of the smaller value plays like oil and gas, some of the small companies there. So that wraps up today's video, everybody. I hope you enjoyed it. If you have any questions, like I always say, send me an email. I'd be happy to answer any questions and respond to you guys. So enjoy your weekends. I will see you on the podcast if you happen to tune in, and otherwise I will see you on next Monday's video. Thanks, everybody.